From the morning reading, oil rally continues, stock rally stalls. Alcoa rises on Monday, falls in after hours on earnings per share beat, revenue shortfall. 3 of 9 sectors moved higher on Monday. XLB, XLF, and XLI were the strongest sectors, while XLV was again the weakest sector. Oil futures rose 67 cents to close at 40.33. Breadth weakened as advancers led decliners 1.46 to 1 on the New York Stock Exchange and decliners led 1.07 to 1 on the NASDAQ. Wall Street isn't expecting much for earnings. Analysts have lowered earnings estimates for many more stocks than they've raised estimates on, to one of the most extreme degrees in 6 years. Also, even though stocks have rallied hard prior to earnings season, that hasn't tended to reduced returns as companies report the results. The medium-term trend is banks have turned negative. At least that's the case if we use the 50-day moving average as a measure of that trend. The BKX index has closed below its average for the first time in 3 weeks, even as the S&P remains above its own. While declining bank stocks were a good warning sign in 2008, historically their record as a leading indicator is poor. ETF traders have pulled more than $600 million from Japan over the past week. That's the most in more than 5 years. For some ETF, fund flows don't act in an intuitive way due to shorting, but in EWJ, it mostly works as a contrary indicator. We certainly wouldn't use it as a sole input, but for those looking at that market, it's an additional input that sentiment has skewed to the pessimistic side. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:22 a.m. Central Time, and I'm recording this in preparation for the market day of April the 12th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And we have had a bit of action in the overnight. At the time of this cut, the S&P futures are up about 8 points, or a little over 1/3%. Russell futures are up about 1/4%. NASDAQ up a little more than 1/3%, and Dow up about 1/4%. Crude oil up about 3/4%. Euro scratch. Bonds down about 0.5%, and gold right at scratch as well. China down about 1/3%, Hong Kong up about 1/3%, Japan up over 1%, Germany up about 1/3%, United Kingdom rotating right around scratch. In terms of the macroeconomic reports for today in the United States, we have import prices, and that looks to be about it. And let's see, and tomorrow we have core retail sales, PPI, crude oil inventories, a regular weekly, and that looks to be about it of note. There is a 10-year bond auction for you bond traders to make note of. In terms of current volatility conditions, we've been kind of rotating back and forth in the market lately. You can see that in the volatility as well. Short-term VIX at a 15.59. Skew is benign. IV percentile also very, very low, with the S&P at a 17, the Russell at a 22, NASDAQ at an 18, and Dow at a 12. You can see there were no standard deviation moves put in yesterday on a close-to-close basis. That's back-to-back days of that, after having been preceded by this oscillation of standard deviation moves really to achieve really nothing. In terms of the charts, let's go ahead and go there. I'm going to go ahead and use the S&P futures. And you see this action, though slightly to the bearish side in recent days, we really haven't been able to achieve anything in terms of a breakdown or a break up. We've been basically just in this sideways consolidation pattern, and our question remains, this is just a perhaps complex bull flag pattern and we're going to break to new highs, or is this going to break down and do something, more significant in terms of a retracement than the previous bull flags that we've had in this move that has started since the middle of February. In terms of the Dow, same pattern, no changes at all. And you notice the indecision here in these last several days, just fairly significant ranges on Friday and Monday, and yet when you look at the open to close, really very little difference at all. In terms of the NASDAQ, a little bit weaker here. We notice how the closes, here's the close, 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 and this is of course the overnight. The closes have been ebbing down a little bit, but really you can't make too much of that yet. We really haven't been breaking down in any way. So again, is this just a bull flag or the start of a rounding top, and we're going to break down? That is the question. Russell looks an awful lot like the NASDAQ with this kind of slowly bleeding down kind of action. But yet, we saw kind of a choppiness here after the historic run, and then that broke to a higher high, and then a little bit of chop, and then a big up day, broke to a higher high before we went into this pattern here. So let's take a look at volatility. Volatility's been trying to pick up, but really hasn't done anything of significant. We're still not even over 18 on the VIX futures. And then gold. Gold is the market that has done something, and we talked about, this breakout a couple days ago, and it has followed through on that. After one kind of sort of inside day, it clearly cleared the area yesterday. So even on the initial breakout, if you'd been stalking that with your diagonal breakout entry, you would have been in around 1231, and you'd already be up about 30 points in gold futures. So even on the GLD, that's a pretty significant move. And of course, this doesn't represent any of the overnight, but you would have had a pretty decent opportunity in that market. Now, this has been related to the dollar. The dollar has been absolutely getting crushed of late. And you look back here, since March the 2nd, the dollar has gone from about 98.60 to as low as 93.60. So about 5 points, and 5 points in a currency market is a very, very big deal. For the dollar to move 5 in this amount of time, that's quite a move. So I think that's probably enough on the charts for today. Let's go ahead and go to our daily report. And we've got kind of a mixed bag here. We have, of course, this intermediate term phase opinion, still phase 4, which is a very bullish pattern. And this is our price patterns near horizontal resistance. So, that's still in play. And yet, in terms of our mechanical market timing signals, we have a decidedly more mixed bag. We have the IBD signal coming in at uptrend under pressure, and that is combined with the accumulation distribution scores on the NASDAQ of a B-, the S&P at a C+, bit of a warning sign there. GMI index actually ticked up a point yesterday, back to a 5 out of a 6, so that one's pretty solid. But the stock charts decision point scoreboards are our third mechanical signal that we follow. Issued actually a new long-term signal on the S&P 100, so that is bullish. And yet at the same time, we've had these short-term signals coming in on recent days. You can see 47, 48, 48 short-term signals that have turned bearish. So we have obviously quite a conundrum in terms of our stack is very poor stack, with the short-term very mixed, intermediate term mostly bullish, long-term mostly bearish, though we do have two signals that have come in recent days on the Dow and the S&P 100 to say long-term bull on the trend model. So this is, at best, it's put as a market in transition, And until we see a breakout of the range from one side or the other, we have to just kind of go with a bit of a bias. Right now, the bias would be pretty hard to give. Perhaps a 60% bullish, 40% bearish bias. This clearly could break either way at this point, and it'd be very hard to put too much more in terms of confidence behind those probability assessments. Position sizing opinions, portfolio model is at 50%, active trader volatility model is at 75%. Intermediate term market posture very strongly bullish and is supported by a weak but bullish sentiment line. You notice though that these have been falling, and we not too many days ago are up above 96 on all these readings, and now you have the Russell. Actually, this should be in red here. Russell did turn bearish with yesterday, closing below the 80 just barely, while the others are certainly closing in. If the S&P drops below an 80, this will turn this market forecast intermediate term opinion to bearish. Weak bear, but bearish. So we continue to see these signs that this wants to fall down, but has not yet actually done so. And we don't anticipate those signals so much as we wait for the signal to actually fire. In terms of the strength of the trend, we're currently a weak bullish trend, but significantly improving. Hedge risk level is currently at level 1, which is our caution light. Think of the yellow light coming into that intersection, and that car in front of you is tapping its brakes, so you want to be careful as you proceed into the intersection. In terms of specific opinions, option income strategies, cover calls, put selling, no change from yesterday. All three of these are still in the acceptable position to initiate new positions to your portfolio. And you can see a little bit of defensiveness being espoused, but for the most part, conditions are quite acceptable. But, kind of put it all in context. If you feel like this is indeed topping and rolling over, perhaps you want to be a bit more defensive in how you construct some of your special strategies. In terms of specific warnings we have from a volatility-based group, market in decline and sharp increase warning. A volatility ratio also has been firing the last 3 days. We have a high distribution day count on the NASDAQ at a 6. VIX phase has been increasing. And we have all 5 of the key intermarket risk aversion indicators have been in the risk off position. In terms of sentiment, medium-term risk for stocks is a little bit elevated. And then in terms of specific ETFs, you have LQD and BND that are pretty high on their sentiment, so you could be watching for potential reversal patterns. Fear and greed index are a combination of 7 different indicators that we pull is from a third party, is currently showing as a 64. So this has been ebbing down. You see a week ago 74, 68 yesterday. It's been ebbing down, so certainly some of that extreme greed has been edging off. No change here on the intermediate term posture by the various symbols. We still have quite a nice mix between high beta and defensive. In terms of sector specific, we have really not much in the way of healthy green, only materials. And how often is that the one that you see as the one that's holding out? And this has got to do with that dollar. We showed you the chart on the dollar move. Well, that helps materials, including yesterday. Crude oil had a very good day, up over 40 on the close. And so that one is the only one that's green on all 3 time frames, short, intermediate, and long. And you see financials and retail, and then also transportation particularly weak. And then a lot of the others here are in a fairly neutral kind of stance. So certainly a market that is being reflected as in transition when you look at this kind of market posture. In terms of percent change yesterday, again, materials and financials showing some healthy increases. Consumer staples, healthcare, telecom, utilities, all those kind of defensive plays, they were the ones that actually got hit the hardest yesterday. So that is also of some interest. Okay, I think that's probably enough for today. We'll go ahead and go into the wrap-up sequence. If you have not done so, please consider subscribing to the YouTube channel. It's a free subscription, but what it gives you when you subscribe to the YouTube channel, and you just go to this website right here to be able to subscribe, but that allows you to get a notification when new content has been posted. And you know, I can post this at a range of times, and many people like to be able to jump on it as soon as it's up each morning so that they can kind of get their morning preparations completed. So we hope that you're finding this is useful to your trading, and it is part of your normal morning routine. Once you subscribe to that, also as you play back, a couple things. When you get that notification, give it a couple minutes to actually finish processing and be available in high definition. When you play that back in high definition, it allows you to see the charts and so forth in a much sharper clarity. You also, from that same access gear button, can change the playback speed of the video to come in at 1.5. And I would suggest you can play with that, but about 1.5 is usually where most people find that they can play this back and still fully understand everything that's being said. Frankly, you can listen faster than I can talk, and that can cut that video down to, you know, perhaps 13 minutes, or sometimes even less. I'm going to just scroll through the rest of this. If you see something of interest, just hit the pause button. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Do note the full disclosures are at this hyperlink here. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading.